A top analyst is calling for a $700 per ounce increase in the gold price next year. We can only imagine what that might mean for silver. I'm thinking like $40, $45 per ounce, but we could go much, much higher. We're going to talk about that. It's a report from Kitco. We're going to cover that in this video, but we've got more important things to talk about right now. Major big stories. Let's start out with President Xi. President Xi Jinping from China is in the United States. He has landed, okay? He's visiting with Joe Biden out in San Francisco. They cleaned all the poo-poo off the sidewalks in San Francisco, really spiffed the place up is what I hear. People are amazed that they could clean up San Francisco so quickly. But here's my question, okay? I'm thinking we have Joe Biden talking to the Chinese president Xi, who cannot really speak English or understand English, and I'm thinking, Joe Biden and him, how much is really going to get accomplished? And then I thought, I need to do some research for the basement dwellers before I make that bold statement. Here's what I found. I'll quote this. President Xi Jinping could understand written English. However, Mr. Xi's listening and speaking skills are very limited. And then I thought, are they talking about Joe Biden? I mean, how much is really going to get accomplished during this summit that Joe Biden and President Xi are having? We'll find out. I'm sure there'll be some great press releases. Nonetheless, that's top of the news this morning. Oh, other big story that maybe is impacting. Do you think this is impacting? Gold's down like, I don't know, $8, $10 per ounce right now. They solved the government budget, the government shutdown issue. Did you hear the good news? Yes, they kicked the can down the road until early next year, another 6 weeks or so. Is I have that correct? And that got me thinking. Have you noticed this about our government? Isn't our government kind of like living paycheck to paycheck? Like living hand to mouth, or however you want to say it? It feels like our government is like going to the payday loan store every 2 weeks to get a cash advance. I mean, what kind of country are we living in? This is supposed to be the strongest economic and financial country in the world. Does it not feel that way? I mean, we won't go down that path, but our country's in this massive amount of debt. It feels like we're living like a third-class banana republic type organization or country. Payday loans, pawn shops. That's what I think of when I think of what they're doing. Like, oh, we'll get enough money for the next 6 weeks. What's next? We'll get enough money through March? I mean, does it concern you at all? It's starting to raise some red flags for me. I don't know. Very interesting. Now, what may have really impacted the silver and gold price this morning were these unbelievably great retail sales numbers. That was the big number that came out this morning. And it seems like gold and, silver and platinum follow gold. Gold was kind of hammered down after these great retail sales numbers. Well, they weren't so great after all. They were down 0.1%, but they were better than expected. I think the expectation was that we'd have down 0.3%. But Dave Kranzler, do you know who Dave Kranzler is? If you know who Dave Kranzler is, type 4 in the comments. He's a very smart guy, okay? He's on Arcadia Economics on a regular basis. He's somebody who I respect, and he put out a tweet on Twitter that we need to talk about because this says a lot about what's going on right now, the reality, the truth. Here's what Dave said. And this was just like 41 minutes ago, okay? Hot off the presses from Dave Kranzler himself. He says, now, take the retail sales number of down 0.1% and adjust it with a real, in capitals, inflation number to derive unit retail sales. That number is really, really negative. And that's what the point, and we've talked about this before. Retail sales were down, guys. They weren't, everybody's like, oh, they beat expectations. They beat expectations. That's like my daughter coming home and saying, Daddy, I got a 60% on my math test, and I was afraid I was going to get a 50%. Well, they're both Fs, okay? And the number we got this morning is an F, but what Dave is pointing out, okay, is that when you factor in inflation, and especially if you factor in the real inflation numbers, not the ones from the BLS, but the real inflation numbers, the number of units being sold of whatever it is, right, that counts toward retail sales. It could be ding-dongs, Twinkies, women's blouses, men's socks, whatever, right? When the number of units being sold is crashing, okay, going down. Now, think about this, okay? We talk about this almost every darn time we meet up, my friends, my fellow basement dwellers. And by the way, I'm glad you're here. I hope you decide to come back. Please leave a comment in the comment section. We want to hear from you. You could give it a thumbs up, and subscribing's free. Nonetheless, we talk about this all the time, right? We know the amount of activity in the economy is contracting. Sure, if you just measure it in dollar terms, it's only down 0.1%. But if you apply the real inflation numbers to it, the economy's down like maybe 10%. Who knows? 8%, 6%, 12%. Why? In what proof? What clues do we have out there? What crumbs of evidence from real numbers do we have? Well, we know that the trucking industry is in a steep recession. Thank you, Craig, for that super chat, my friend. Really appreciate it. Thank you. Super chat, Craig Edmonds. We know the trucking industry volumes are down, 10, 15%. We know rail volumes are down. We know air freight volumes are down. And what's the darn word? Somebody help me. What's the term that we use to describe the big shipping containers when they get shipped from China to the United States, from Brazil to China? What is that called? I keep wanting to call it intermodal, but that's not what it is. Somebody knows, leave it or email it to me, because I feel like I keep meaning to research that, but I forget to do it. Nonetheless, those are the clues. Those are the breadcrumbs that tell us that the economy is really in bad shape. Now, later we're going to talk about this analyst who's calling for a $700 increase in the price of gold next year, okay? And he talks about a lot of these same things. Right? Thank you, Dave Kranzler, for that awesome tweet this morning. I love the real numbers. That's what we're all about in the basement, the real story. We're not anti-American. We're not anti-anything. We are pro-truth. See the forest through the trees. And I'm going to tell you, the people that have come on these live streams, the people that watch the videos, the comments, you are a little smarter than the average bear. Okay, we're not being braggart. I'm not trying to pump you up or give you, any big, but it's just the reality. You're willing to dig in a little deeper and see what's really, really going on. And when we do that, what we see are things like Mr. Kranzler just said. Let me get back to my notes, okay? Other great news that the economy is doing so awesome. We talked about this earlier in the week, but today it's official. Citigroup will soon begin layoffs. CEO Jane Fraser's corporate overhaul. This is from CNBC. Employees affected by the cuts. How would you like to be working at Citigroup today? Maybe you're making $160K a year, not doing a whole lot because business is so slow. Your blood pressure might be getting a little high because employees affected by the cuts will be informed starting today, Wednesday, with new dismissals announced daily through early next week, according to people with knowledge of the situation. How would you like to be there? Like, well, over the next 4 days, you're gonna learn if you can still make your credit card payments, your house payment, your car payment, your student loan payment, all those payments. You'll find out because they are laying off at least 10% of their global workforce, and their global workforce numbers 240,000 people. That's 24,000 people. Think about the last time you went to an NHL hockey game or an NBA basketball game. I don't think I've ever been to it. Maybe I've been to one. Anyway, a big arena that seats 20 or 24,000 people. Visualize that. All those people are losing their jobs. All those people are gonna be suffering. So our hearts go out to them and are not going to be able to make their car payments, their student loan payments. Right? They were told, oh, go to college, take out debt. You can work for the rest of your life to pay off that debt. Well, now they can't even work to pay off that debt. And we know student loan payments have restarted. It's a scary situation out there, guys. No doubt about it. Oh, last one. Then we're going to talk specifically about gold and silver, because at the heart of it, that's what we're all about. Precious metals and friendship, and being neighborly with one another. Speaking of that, my neighbor called me earlier in the week. That's why I don't have the red shirt on. And she said, "Hey, Ron, is there any way that you could mulch my leaves up in my yard with your tractor?" And I'm like, "Oh, I don't want to do that. Long story short, I used to help out a lot of my neighbors, before I started Ron's Basement full time. And I'm like, no, I don't really want to do it. But then I thought, this is my neighbor, Sue. I could call Sue anytime, 24 hours a day, and I know she would do just darn near about anything for me. And her husband's out turkey hunting, so her yard's a mess, and she wants my help. So I said, sure. Okay? I forgot why I was going there with that one. Oh, be neighborly. We talk about being prepared for difficult times, right? You want to be prepared monetarily. You want to make sure you got some food or know how you'll get some food. You want to be prepared emotionally for what could be some very difficult times, right? Maybe it'll happen in our lifetime. Maybe it won't. But at the end of the day, it's also important to be prepared with good relationships. And the key to good relationships is a lot of times doing things that you don't feel like doing to help out your neighbors, right? Or to help out your family or whatever. You may not feel like doing it, but you do it anyway, and you do it with a good attitude. I went down a long road. Let's talk about one more sign that the economy's great. Can't you feel how great the U.S. economy is? Huh? Can't you feel it? Right? Let's talk about Target. I can't stand going to Target or Walmart or anywhere else, but nonetheless, Target today put out their earnings, okay? They topped analyst expectations. Their stock is zooming. It's flying. Oh, but there's something hidden in there. It says, yet the big box retailer stared down the same challenges that it's faced over the past year. This is Target. Shoppers aren't buying much more than the necessities. Shoppers are only buying the necessities. Oh, what does that tell you? Or they're going to the dollar store because they can't afford Target. They're hungry for lower prices. And when they do make purchases, they're postponing them, such as waiting until the temperature drops to buy a pair of jeans or a sweatshirt. That's from CEO Brian Cornell. So people aren't buying sweatshirts, right? It's getting cooler here in St. Louis. I happen to have bought this one a few years ago. It's not from Target, but nonetheless, people are only buying things when they absolutely have to. But retail sales are great, right? Retail sales are doing awesome. It gets more interesting. For the second straight quarter, Target's comparable sales declined. Okay, this is Target. This is not high-end whatever, right? This is like Walmart Target zone we're talking about. Sales declined. The industry metric, also called same-store sales, takes out the impact of store openings and closings. We've got sales dropping at Target. We've got sales dropping everywhere, okay? And we got our government telling us that retail sales are great. We've got the trucking companies that deliver all the products to Target and Walmart and Home Depot telling us that they're in one of the steepest, most difficult recessionary times they've ever experienced. But somehow the economy expanded at 5% in the third quarter. Okay, now don't forget, Peter Schiff pointed this out. This is critical to remember, that when we went through the Great Recession, remember that, 07, 08, whatever it was, the government didn't recognize that we were in a recession until like a year later. They always go back and revise, right? After the turds hit the fan. Hopefully I can say that without getting timed out by my moderators. I'm just joking. I love the moderators. They're doing great. But when the poop hits the fan, that's when they say, oh, you know what? We made a mistake a year ago. In the third quarter of 2023, the GDP growth wasn't really 5%. It was more like, let's say 3% or negative 1% or whatever the case may be. And guys, this all creates an environment that's going to be so conducive for gold and silver. All right. Now we're going to go into talking about this article from Kitco about an analyst who says $700 increase in the price of gold next year. At current spot prices, that would put us right at $22,650 per ounce. Before we do that, if you want to get yourself some gold or silver, go check out Pimbex, Pimbex, Pimbex.com. Okay, online bullion dealer. Do yourself a favor. Throw them in the mix next time you're out there shopping for some silver or gold or platinum, whatever it is you like. You want bars, coins, whatever. They've got it all at Pimbex. But what they also have, which is exceptional about the company, is ultra competitive pricing. You get more silver, more gold for your money. Many times, if you compare what you can get the exact same product for at Pimbex to, let's say, one of the big online name brand bullion dealers, and let's say you're buying 100 ounces or 50 ounces of silver, with Pimbex better prices, you can get yourself sometimes 3, 4, 5, 8 additional ounces of silver, and you're getting the exact same thing from Pimbex that you would get from one of the big bullion dealers. It's important that you trust them as well. I trust them. Okay, I've worked with them. I did before they were a sponsor of Ron's Basement. So check out Pimbex, Pimbex.com. I think Pimbex is best, and you will too. And I love to say that word, Pimbex. Pimbex is best. I think I coined that, didn't I? Anyway, let's get into this. Gold prices. This is from our friend Niels. We love this guy over at Kitco, Niels Christensen. He used to do videos. Oh, I forgot to do the bell. Thank you guys for the thumbs up. Thank you, basement dwellers. I appreciate you being here today and the thumbs up. Can we get to 200 thumbs up today? We'll find out. And if we do, I will ring-a-ling-ding-a-ling that cowbell, and I'll do it extra loud. Okay? Because I lost my hot dog today. The hot dog's gone forever. Okay? Anyway, the hot dog's gone. Goodbye, hot dog. Now, gold prices can run $700 higher. Thank you for the super chat. As the U.S. faces a debt spiral. This is from Jess Felder. This is from an article from Niels Christian from Kitco. It says in a recent interview with Kitco News, Jess Felder, creator of the Felder Report, said that the Federal Reserve is desperate to make sure that financial markets remain confident in its abilities to navigate uncertain economic conditions. However, he added that in its desperation, it is on the cusp of making significant policy mistakes by maintaining higher interest rates in a world flooded with sovereign debt. What they're saying here is the world cannot absorb higher interest rates for much longer. Okay, it's going to make everything blow up. There's not enough money out there to pay off all the debt. Number one, and at higher interest rates, it exacerbates what is already a precarious financial situation, not just for the United States, but for the entire world when you consider the levels to which the debt has risen, okay? He says, quote, the Federal Reserve keeps saying that interest rates will have to be higher for longer, right? That's bad for gold and silver, but as a result, we are starting to see problems in the Treasury market. We're going to see more signs of financial instability with more volatility in treasuries. Because of its rising debt and elevated interest rates, the U.S. government paid, are you ready for this, $880 billion in interest during the fiscal year that ended September 30th. Okay, that's last year, ended September 30th, $880 billion, okay? Debt service costs are expected to increase to over $1 trillion in the current fiscal year. The debt costs have surpassed. Now we're spending more on interest on our debt than we are on national defense. Okay, Felder added that in this environment, there is very real risk that the bond market can become unanchored to the economic conditions He said this could also push equity markets back into a bear market territory and risk pushing the economy into a recession, forcing the Fed to jump in and cap bond yields. What he's saying here, guys, is we are in uncharted territory with such huge deficits, such huge debt loads, right? And a precarious economy. And what he doesn't talk about, but I think needs to be mentioned, I don't know how you feel about this, but on top of it all, the cherry on top, right? The piece of broccoli or the piece of spinach, whatever food you hate, whatever food you cannot stand, that goes on top of this bad situation, I'm using good language today, is the fact that we got the world bifurcating, right? Now, I know we have Xi Jinping and Joe Biden, right? I'm sure they're having a really engaging conversation right now, right? As China and the United States come together, I'm sure that a guy who cannot really speak or understand English and Joe Biden are getting a lot accomplished. Maybe their advisors are, but nonetheless, that's what's going on in this world right now, okay? He says, as Treasury market volatility, aka financial problems, financial crisis, grows, the Fed will have to step in. This is key. Listen to this. They will say they are not going to end the balance sheet runoff, but they will introduce a new program. I've told you guys this. I believe this also, to help stabilize the markets. He said, quote, markets will see through this, right? They'll see the forest through the trees and see it as a new round of QE. Boy, we don't hear that. Remember QE1, QE2, quantitative easing. That's another name for money printing or unicorn fart dust creation, right? Oh, the Fed's going to have to step in and save the bond market. Now, and he said, that's when the gold price explodes. That's when the silver price explodes too, Jesse. You forgot to say that, okay? The other thing that they don't talk about in this article, and we aren't going to dive deep into this because won't purport to you to be an expert in this arena, but we've got this program, quote unquote. You see, during the C-19 crisis, our government printed 40% of all U.S. dollars that are in existence. The banks had all this extra money. They didn't know what to do with it. So the Fed said, we'll start a new program called the reverse repo program, where you can give us all that money and we'll pay you 4.5%, 5%, whatever it is, percent interest. A very attractive rate. The Fed wanted that money back. So the Fed had trillions of dollars they were holding. And now, over the last number of months, let's say 6 months, 9 months, the Fed has, because market interest rates have gone higher, is encouraging, and the banks are financially incentivized to pull money out of that program. And what are they using it for? They're buying treasuries. When's that? That's what's supporting, that's the big story too, guys. That's what's supporting the bond market right now. At the current drain rate, that money is set to run out sometime between January and March. Then who's going to buy the treasuries, right? And that's what this guy's saying, right? Markets will see through this because it's going to be the Fed who has to step in and control and what could become an out of control bond market because there aren't any buyers. Even right now, we just know last Thursday, the Fed had a disastrous bond auction. Nobody wants to buy the debt. China doesn't, I bet Joe's telling them right now. I wish I could listen to that conversation. Joe Biden talking to a Chinese man who doesn't really understand English. I hope there's some very good translators involved. Nonetheless, I bet one of the big key things Joe's telling us, we need you to buy our bonds. We need you to help finance the the Chinese aren't real interested. The Russians aren't real interested. The Saudis aren't real interested. Guys, we are living through a very interesting time. And like this guy says, the market, when the Fed has to step in, markets will see through this and see it as a new round of QE, and that is when the gold price explodes. He also added that conditions will be ripe for gold. Ripe for gold. We like to talk about very fertile soil for the gold and silver price, don't we, my friends? Huh? When the U.S. unemployment rate starts to increase, and that's coming. Oh, yeah. Didn't we just talk? Hello, basement dwellers. Didn't we just talk about Citigroup laying off 10% of their workforce? A whole darn a basketball or hockey arena full of people? Huh? Yeah, exactly. Okay. Where was I? When the employment rate starts to increase and as recession fears begin to build. We haven't seen nothing yet, right? We know, right? We're fearful people. Are we a little paranoid? Are we crazy? We are not part of the herd, okay? We're out ahead of the herd. We're out a little bit ahead of the herd. Like, I'm not just going to follow the herd. I want to know where we are going, right? And that's what we're doing. When the herd starts to realize unemployment's going up, when the herd starts to realize, oh, we might be having a recession. What about a depression? Huh? We talk about that, don't we, friends? Don't we? I mean, we're not afraid to use the D word. I think the odds of a depression are much, much higher than anyone, maybe even we are willing to recognize, right? Because that's really scary. That's a real scary situation. He pointed out, it's inevitable that yields will continue to rise because the U.S. government is in no condition to provide any fiscal support when the economy eventually falls into a recession. The government, Janet can't save us. Janet Yellen and the government, right? You got the Fed on the monetary side, and you got the Treasury on the fiscal side. They don't have any money. They can't save the situation. He said the size of the U.S. debt and rising deficit will make this recession different from any other. Anything the government will do will only widen the liquidity hole in the treasury markets. This is how a debt spiral begins, a debt spiral, okay? He said, over the next few quarters, investors are going to realize that this fiscal problem isn't going away, okay, and will eventually turn to gold. And I'm going to add silver to that as well. Guys, the problem's not going away. Think about yourself. You can think about this big government issue in terms of yourself. You can narrow it down, okay? All right? And we're going to do that first. Let's talk about First Mining Gold. If you want to invest in a company that has gold in the ground, development stage, they've already discovered and defined the gold. Check out First Mining Gold. They have two of the largest development projects in Canada, Springpole in Ontario and Duparquet in Quebec, right? Both of those have over 5 million ounces of gold in the ground. And when you do buy the stock, or if you buy the stock, I'm not giving financial advice, but you're getting gold in the ground at a very, very attractive rate. Do some research, do your own due diligence, okay? I'll put a link to Paul Morris, his email address. He's the Director of Investor Relations. If you have any questions, you can reach out to him. But I'm an owner of First Mining Gold. That doesn't mean you have to be, but I think it's a company worth checking out. Unbelievable, great value right now. And it's not just First Mining Gold. The whole junior mining sector is a great value right now. If and when we see a big turn in the precious metals prices, there could be fantastic returns for these junior mining companies. But stocks are risky. Do your own due diligence. Now, let's get back to what we were just talking about. The size of the U.S. debt and the rising deficit will make this recession different. People are going to go to gold. As to how high gold will go in a new rally spurred by a debt spiral, okay? Thank you, Daniel. Good morning, my friend. Man, you guys are the best. Thank you to everybody for being here. Thank you for the super chat. A debt spiral. Let's get back to this. Think of yourself. You can compare the situation of the United States government to yourself, your own financial condition. Okay, it's not going away. That's what Mr. Felder just said. Okay, if you're sitting on a ton of debt, right, house debt, car debt, student loan debt, and a bunch of credit card debt, and you figure out a way to borrow some more money to get through the next few months, that's great. Hey, everything's dandy, right? Well, no. The real problem is not going away. Wow, we have almost 300 people on here, according to my statistics. Thank you, basement dwellers. It's a big deal you're here. Don't forget, you can always go to ronsbasement.com if you want to connect with basement dwellers 24 hours a day, 7 days a week. There's a lot of neat categories on there, one of which is who can predict the closest spot price of gold by Friday. Check it out, if you will. He says, finally, quote, the 3-year... he's telling us about the difficulties that we have been through as investors in silver, gold, and the precious metal mining stocks. Okay, he says the 3-year sideways correction in the gold price, the 3-year torture that we gold and silver investors have been through, is a very classic bullish flag pattern. When looking at the flagpole that preceded it, which was the rise in 2018 and 2019, a simple projection from the classical technical analysis highlights a target about $700 above the current price. So he's not just basing this on the fundamental reasons, which we talked about, right? Screwed up government, screwed up finances in our government, our country, debt spiral. That's going to be a big key going forward, guys. Debt spiral, right? Bifurcation. Let's use some big words, right? Bifurcation means splitting of the world. That's going on right now. The loss, de-dollarization. Nobody's talking about that. Nobody. Remember BRICS, bifurcation, right? De-dollarization, which has been recognized as a major trend throughout the world, just at a time when the U.S. government needs to borrow more money. Thank you, Ozman. Thank you for bringing the morning mining stocks. Hold on, I'll try to read that better. Hold on a second. Ozman says, thank you for bringing up the mining stocks. I took you up on the tip a few months ago and have done well with them. Oh, wow. You know, I can't predict what's going to go on, guys. I always want to reiterate to you, I am not a financial advisor. Stocks are risky. I mean, everything's risky. Putting your money in the bank is risky. Most people don't realize that, but mining stocks in particular can have wild swings one way or the other. So I always will share what I'm doing, okay? And I do have a list of the companies I own in the description of every one of my videos, but you need to do your own due diligence. You need to do and manage your money in the way that feels most comfortable and best for you. I've been right a lot in the past, and I've also been wrong. So, but I will always be honest. That's what I'll always give you my opinion on what I see and what I think. So this guy's saying the fundamental reasons are in place, and he forgot a few of them. I'm sorry, he did. Excuse me, us basement dwellers, we know we can point out a few more things to Jess, like you forgot about the bifurcation. You forgot about the de-dollarization, right? You forgot about a number of other factors that are also going to be very supportive for the gold price. Now, I can't get over the fact that I think this is the one thing that we can really, hang our hats on. And this, I have a hard time. I struggle being able to communicate this to you. So give me a second, because I want to show you something more that we got for the giveaway. Bear with me. I'm not going to leave the camera. I'm over here. I have pants on for those of you. There's no hot dog today. Here we go. We are going to be adding one of these, and I have 3 more to give away. 925 Thrift. This is a book that is super interesting. I read it. Our friend R.E. Gold sent us 4 copies. I'm going to add one to the Black Friday giveaway, one to the Christmas Eve giveaway. But this book, 925 Thrift, teaches you a lot about silver, but what it taught me a lot about is like how you can look for silver in other places as well, like at thrift shops, garage sales, grandma's attic. It gives a real good education on silver in general, but what it really shines, in my opinion, is teaching you what to look for as you're out and about in the world, because a lot of people have no clue of the value of things like sterling silver, silver jewelry, and all that. So if you're interested in that, you could win the book in either of the giveaways, and I'll have 2 more to give away as well. Or you can grab one for yourself on Amazon. Okay. Now, this. I'm going to talk about 2 things, and we're going to talk about gold, but we're talking about silver here as well. Okay, guys, if you've made it this far, if you're with me in the basement, with us, it's not me, it's us in the basement right now, it's a big deal. And if you've been invested in this sector for the last 3 years, it's been challenging. There's no other way around it. It stinks. It's been horrible. If you're invested in the precious metal mining stocks, it's the worst of the worst. People are saying it's never been this bad, okay? And if you're not invested in the mining stocks, why it's important that you pay attention, at least. If you're just a physical, if I don't hold it, I don't own it type person, why it's important you watch the mining stocks is because the sentiment, the level of interest in the mining stocks does reflect the level of interest in the overall markets, okay? There's a direct correlation between the sentiment in the mining stocks and the level of sales at online bullion dealers and at your local coin shop, okay? And the sentiment is it's not just in the tank. Now, look, a year ago, I was wrong because I sat here and I said, look, the sentiment in this sector is on the floor. I think I even said I would do a live stream from the floor, okay? Look, and it can't get worse, right? Well, it did get a little bit worse. I think now it's like 2 feet down below the basement floor, but there's good news embedded in that, okay? Unless you think that metals and mining is going to go away altogether, it's going to get better. And I will repeat this every day until it happens because we need to remember this, right? It gives us, it's not just hope, it's the truth, right? That when a little bit of sentiment gets better, okay, it's going to be a lot of money because there's so little money in the sector right now. It's just going to take a little bit of improvement in sector, which would be a little bit of money if sentiment was better, but since sentiment is so low, that little bit of money makes a huge difference, right? I'm trying to think of a good analogy. It's like if your gas tank only has a half a gallon of gas in it, right? And you go to the gas station and you put 2 gallons in, that's a big difference. But if you got 18 gallons in there and you go put 2 more gallons in, well, big deal. And that's not even a good analogy, but what the heck? It kind of sort of works. What I'm saying is, you know, if there's, let's say, just to use numbers, and these aren't accurate numbers, but let's say there's, you know, $80 billion total in the junior mining sector, whereas in normal times, even like 3, 4, 5 years ago, instead of 80 billion, there was 400 billion. And that really, I mean, the junior mining sector is like at 20%. If another 40 billion comes in, that's a big deal, right? That's a 50% increase. Whereas 40 billion on the 400 million that we're used to during good, that's only a 10% increase. So there's good news embedded there, but it gets even more if you want to talk about the price of the metals themselves, right? And we'll focus on gold, but this will absolutely bleed over to silver. And you tell me does that make sense, what I just said? Let me ask that first. Please type yes or no. Now I'm going to type yes, okay? So I'm going to practice what I preach, because it makes sense to me, but maybe I'm wrong. Maybe this whole theory I have about sentiment, a small improvement now in sentiment could be big gains in the metals prices and in the stock prices. Yes. Hopefully the U.S. dollar index. Yeah. Thanks, numismatic stacker, for bringing that up, my friend, because that's a great point. I'm going to remember to talk about that. The other thing I want to mention, yes, sorry you feel that way. The other thing I want to mention about this is whatever gold is at right now, let's say 1950 per ounce, we are still within striking distance of a new all-time high in gold. Gold gets all the attention, okay? Everybody loves silver. There's more people that love silver, but for some reason, Gold's like the favored child, okay? Gold gets all the attention. Gold can get on the cover of the Wall Street Journal. Gold can get on the cover of Fortune magazine. Gold might get on the front page of your newspaper at some point. If we get to this new all-time high, okay, maybe, we got a shot at it before the end of the year. If we get to 2,100, okay, and we do that with in this environment where sentiment is so cruddy, okay? All right, so we get to a new all-time high while sentiment is so cruddy. Think about that. Does that make any sense? That makes no sense. And then we get a little attention. I mean, it's like saying, I ran a half marathon once. I'll never do that again. I'll tell you that. But that's like saying, I'm a runner and a competitive runner, and I just ran a half marathon. I will never do that again. But nonetheless, I won't digress. But I ran it with a sprained ankle. Okay. And then there's another race coming up in 2 months. I just ran. That's what gold did. If gold gets to a new all-time high by the end of the year, it just ran a half marathon or a marathon, whatever, with a sprained ankle. And then you give it some time for that ankle to, and that would be the sentiment. That's the crappy sentiment, the sprained ankle. You give it some time for that sprained ankle to get better in the next 6 weeks, we could really fly. I think that's a good analogy. I think I'm going to use that one again. That's like unicorn fart dust and ding-dongs and everything else. No more hot dog, but everything else. And I won't ever talk about the hot dog again. Never. Hot dogs are gone. Period. I mean that. You're never gonna hear that word from me again. Excellent. Hello, JMM. Hello, Annie. Hello, Jake from Jake's. Oh, the dollar. That's the kicker. That's the big kicker. And you know what, guys? Again, good news. People say, "Oh, the dollar." When the U.S. dollar index goes up, gold and silver go down. I guarantee you, gold's still down right now. That the U.S. dollar, the DXY, you can go into your Google search bar and type in DXY index and pull up the Market Watch chart, and you can click on all the different time frames: 1 year, 1 month, 5 years, all time, right? And you can see that, yeah, the dollar is pretty high, okay? Can it go higher? Yes. Can it go much lower? Yes. Where it is right now, I'll pull it out. What the heck? Don't forget the cup and handle. That's good. Somebody was bringing it up for silver as well. That's a long-term chart of the U.S. dollar. That's what impacts gold. It's a bunch of BS, but it's just the reality. That's what impacts the gold and silver price right now. That pink line is where we are now. This goes back to 1985. So that's what? 15 plus 23, 38 years. That's like 40 years. Okay. Where we are right now is the pink line. Do you see something on there? It's very important. We've only been this high hardly at all. That 1 point right there, and that was around 2000. Okay. All this area below the pink line is good for gold. Okay. The area above the pink line, which is where we are right now, yeah, is bad for gold and silver. So it seems like the odds are in favor that we're going to go below the pink line. The other thing to consider with that when we're talking about precious metals is that's just a relative valuation, comparing the dollar to the euro, the yen, a bunch of other, it's like comparing the best 4 cars at the worst used car lot in the town that you live, right? Like a 83 Yugo and what was that called? A Ford Escort from the 80s. Like that's what you're comparing. So all of those currencies that are used to make that index that compares them to one another, They're all printing money. They're all being devalued simultaneously. So I appreciate that comment. That helped me remember that. Hey, guys, have a great day. I'll be back tomorrow. Oh, wait a minute. Wait, whoa, 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 whoa. We got a few more things to talk about. We need to celebrate 200 thumbs up. We got 188. Come on, we got 300 people on here. I will celebrate the 200 thumbs up today with you, my fellow basement dwellers, okay? Don't forget to check out the website, ronsbasement.com. And I'm telling you, we got this forum. It's incubating. It'll be a place where we can all go 24 hours a day. We got 193. Oh, we're so close. Come on. Let's see what we can do, huh? Let's see what we can do. Let's pick here's what we'll do. Here's what we'll do. Let's go to cnbc.com and see what the top news of the day is. Huh? What do you say? What do you think the top news of the day is going to be on CNBC? What's that? What? I'm there. Oh, that's Susie yelling at me from upstairs. I thought she said I was a bear. All right, we are, but we're still going to go, and then I'll ring the bell. Okay? Thank you, guys. GM union workers. Oh, GM union workers appear poised to vote down a record UAW deal. That's interesting. Wholesale prices fell 5.5% in October for the biggest monthly drop. Oh, that's interesting. Citicorp is laying off, a whole basketball arena of people. Our hearts go out to them. Oh, and yeah, the political situation is so great here in the United States. Ex-President Trump requests a mistrial in a $250 million New York fraud case. Oh, here, Thanksgiving dinner will be cheaper this year thanks to lower turkey costs. Well, there's some good news for us. Let me ring that bell. Up here it is. You ready? Thanks, guys, for being here. You have a great day, my fellow basement dwellers. Don't forget to subscribe. We're trying to get to 30,000, and I'll see you, yes, you, soon.